Okay, I will start now. Good morning, everybody, again. Thanks for joining us. Thanks. It's on a Saturday morning before Shankaranti and all, I understand. Thank you very much for your valuable time in joining us. Most of you who have joined us will know about DhanLAP. We are a digital platform that enables advisors to service their clients in their short to mid-term needs with their mutual funds. Basically, most of you are registered. I can see most of the names that I'm familiar with on the screen. For most of you are registered with us and stuff like that. This is a session that we've started. I mean, we did it about a year back, about 5 or 6 sessions, and we started in the new year for our partners who have associated with us, who have signed up with us and stuff like that, to have a monthly meeting. Hopefully, we'll have it in the next 12 months. We'll have 12 meetings for sure in this year. That's what we're trying to do. And then we thought, I mean, most of you might know what is loan against mutual funds and stuff like the preliminary awareness and stuff, and other things have been already been communicated by me and by my competitors and everybody else in the industry, basically the mutual fund industry. But what we thought was we will have a specific part that we will address. What are the challenges, basically? I mean, the first challenge when I started the business about 3.5 years was we were the first digital platform to offer loan against mutual funds across all mutual funds. At that time, awareness was the biggest concern, basically, because people were not aware, hey, what is this? We can do loan against shares. What is loan against mutual funds? Can you really do it? And stuff like that. Slowly, we went to cities, we went to webinars, we went to seminars, we went to conferences, explained to people, the advisors, the RIAs, and the brokers, everybody we addressed. We tried to do one-on-one or in a group setting in their association meetings and stuff like that. That was like 2023, 2024, actually. Then now people have slowly understood what it is. And now we are going to see what are the challenges you face, because with our experience, we can see from our point of view what the challenges are and how you can overcome it. I mean, your clients, what are the challenges for clients to accept it as a product, and what are the services that you can provide, and what are the comfort that you can provide to your clients. We can have a Q&A session after this. It's a brief presentation. Most of it probably you all already know if you are with us. There is some information which may be new to you and coming through this presentation. I'll introduce myself. My name is Chandra, and I'm a CEO of DhanLAP. Most of you probably know about me and stuff like that, or have spoken to me at one point or the other in the last couple of years. Basically, like I said, the topic for discussion will be what are the common client hesitations? We have been running it for the last 3.5 years, right? So we should know what the clients are doing, why the clients are not getting, why the clients are not coming in hordes to do loan against mutual funds and stuff like. What are the hesitations, and how you can, as an advisor, as an RIA, as a broker, as an advisory person as a guiding person to the clients, how you can educate the clients on the benefits and make them take it instead of redeeming their assets, instead of redeeming their or selling their assets. How can you preserve their assets and investments for the long-term growth? So if you look at it in a very broad sense, I'll tell you a couple of cases that I faced. I faced in the last year or so. A person was taking a loan every 2 months. A customer was taking a loan every 2 months. For example, on January, March, April, May, and stuff like that. We were very curious. Why is this guy coming and taking a loan every 2 months and stuff like that? Then we called up the customer, because he's coming directly and taking loans. We don't even know when he comes, when he takes a loan. So a digital system. So we asked him what is happening. Then he said he's building a house and he wants money only in tranches. Like he wants in January put a foundation, and in March to build the house or whatever, and May to build a second floor, whatever it is. He wants in tranches, and he was leveraging his mutual funds to do it. That was a very eye-opener for us, because repeat customers usually repeat customers in our platform are usually for different cases. They will have a emergency, they might have a credit card payment, they might have a school fees or a college fees payment and stuff like this. Is a very unique case. That's why I want to address this and tell you how the industry is thinking, or when I say industry, not the people in the industry, how people outside the industries are using the product of the industry. When I say industry, it's mutual fund industry in broad, and loan against mutual fund in particular. how they use it and stuff like that. Therefore, he didn't have any hesitation. He planned his stuff and he did it, did every 2 months. And after 8 months, he got the money and from some, he got a loan or something like that. And then he finished off all his loans in one shot after 8 months, 9 months and stuff like that. So this is a unique use case that I want to share with you. And then I can tell you about a common client, I mean, how the client is educated, aware of it and stuff like that. I can tell you about a year back or year and a half back, a father was sending his daughter to education abroad. Usually now that's become a very, I mean, it's a very common thing. Before, only a few people in a city or a few people in a locality will go. Now every street or every house has one person going abroad to study. Therefore, that has become common. Therefore, the money required for it is also huge. And educational loans, they are not sufficient, or the interest rates are higher, and the legality involved in getting a loan is becoming complicated and stuff. As more people go, the loans are restricted. Government gives you about 4 lakhs, and then 4 lakhs is not enough, and you have to get your get an education loan from private banks or private education loan agencies and stuff like that. Before, this father was having money in a mutual fund. Obviously, it's a mutual fund investment, and he was saved it for his daughter's marriage. So what happened was, when the education came in, he was about to sell and stuff, like he was talking to people. Somehow we came to know about our platform through our ads, through our connects and stuff like that. And he spoke to us and said, "What can I do? Why can't I take? Can I take a loan?" We said, "Yeah, definitely. That's a great use case. We have not thought about it, but yeah, at 1.5 years back, we didn't think about this use case. Now we are spreading that use case across the country, saying that this is all the things that you can use. I give you a list of things that people take loan against in the slides that's to come by. Therefore, what is happening is, that person took a loan, and an education loan has its own problems of compounding interest, and the daughter has to pay after she finishes education when she started working. In this case, he took the loan against mutual funds, and it was very easy for him to pay every quarter or every half year and stuff like that, do a small prepayment. And by the end of 2 years, I think 1.5 years back, he took a loan. Almost he's like 60-70% he's completed his prepayment of his loan and stuff like that. So the loan against mutual fund is not only for short to mid-term needs or emergency need. That's how people look at it, or to buy something immediately and stuff like that. It is also for that, but it's also for leveraging your long-term interest, protecting your long-term interest, and servicing the current interest. That's the whole point that I want to bring across in this presentation. People always look at loans as a short-term thing, 3 months, 6 months, 1 year, I'll pay it off and go ahead. That's fine. That's great. I'm all for it. I'm not here to give you enough loans and burden you and stuff like that. You're here to leverage your assets instead of selling it. If the father has sold his assets, or the guy building a house has sold his assets, I mean, 2024 was a great year. I think at least the first 10 months was a great year, actually. Therefore, you would have lost all the growth that's associated with it, and he has to save it again and all that stuff. Here, he's paying the EMI and then giving a loan, or paying it prepayment when he gets a bonus or something like that. So there's a lot of avenues available once a product is mature. Now the product is pretty mature, actually, in platforms. Therefore, you can advise your clients with full confidence that this will be taken through. And there are, I mean, I'm telling you only a couple of use cases. A lot of use cases where the client hesitation is there, and you can tell the benefits of the loan against mutual funds product, and then ask them to go ahead with it. This is just an introduction to you, so that I'll open up the floor. I mean, for Q&A, you can ask me more questions, but we'll go through a brief presentation on why you have to do it, what you have to do it. Some of them, probably 60 to 70% of them, or even more of them, maybe, I mean, maybe you already know about it, but there are some people who might not know. I'm just giving an intro about it and stuff like that. So, I mean, like I said, mutual fund. What is a loan against mutual fund? It's very simple. All of you probably know about it. You're leveraging your mutual funds for some need. The need can be anything, right? From emergency need to a short-term need to a mid-term need and stuff like that. You're preserving your assets so that you can borrow against it. Why digital loan against mutual funds? This is where the whole stuff turns. See, loan against mutual fund is not a product that we invented from heaven or something like that. It's been a product for the last 20 years or even more. I don't know. Before 20 years, I'm not sure. Mutual fund industry itself in India is about 30, 31 years old. Before last 20 years, at least banks were giving loan against mutual funds, loan against anything and stuff like that. Therefore, what we have done is we have made it digital. Therefore, there is no documentation needed. There is no, I mean, approvals, and there is when you pay off the loan, you wait for some 2 or 3 weeks to get your get your funds free and all that. So there are lot of benefits by making anything digital. Forget about any product. When it become a physical product or digital product, has its own advantage, and financial product especially has its own ways, because it shortens the time, it increases the convenience, it's available wherever you are. You are in Timbuktu, you can do it. You just need an internet connection and a excuse me, an internet connection and a laptop or a phone, even a phone to do it. That's all you need to avail this, basically. For a lot of advantages to the product itself and the product being digital. What happens is, why, if you look at, I mean, this is a news clip that I've just shown you. 50% of equity investors, I mean, whatever you read on the screen, I mean, whatever, sell it off for whatever reason within 2 years. That is a statistic that is there. Probably it has improved a little bit in the last. This is probably about 3 months old article or 2 months old article. It might have gone even worse with the market doing bad and all that stuff. But on an average, nearly 50% of them take the investment within 2 years. It's not by design. It's basically either they have a need, or they want to take it off because they're not satisfied with the returns. Forget the part of the returns, because returns have been very, very good in the last, whatever, from January to October in 2024 and 2023 and stuff like that. Later on, it has fallen down. But this I'm talking about over a period of time, over a period of 5 years or something. They have studied for interviewing 1,700 people. They have studied across the country and all that stuff, and they have taken, and they have said that 50% of the guys are this thing, basically. And then for us as advisors, basically, it's a bigger challenge. One is the industry is losing in 2 years 50% of the assets. More than that, individually, if you look at the gross to net inflows, it dropped by 50%. This is very, very recent data. July to September, we are talking. Gross is gross inflow that you get. Net is basically out of gross. If you have got 10 crores inflow, basically, only 5 crore 10 lakhs has come into the system for that month, basically. And you took an average over a period of 3 months and all that stuff. Therefore, that is very scary. I mean, we say the book is improving. The thing has been 70 lakh crores is the asset. I mean, at least 40 lakh crore or 45 lakh crore is the retail assets, AUM, and all the stuff is great, basically. On the other side, it's a leaky bucket. That's what we call it. On the one side, it's water is getting filled. The other side, it's not leaking very much, but it's leaking significantly every month. So that gross versus net is pretty bad, actually. People are taking out money. And we're talking about July to September, the market is pretty decent, actually. So if you look at your business, an advisory business, an RA, whatever, I call it advisor for everybody, MFD, RA, agent, everybody I call as advisors, because you're advisor, you're guiding clients, you're guiding your customers. That's why you're advisors in many respects, in all respects, basically, not even in all respects. So what happens is, if your AUM, assume your AUM goes 15% year on year, inflows plus market growth and stuff. Assume a normal, we have seen normal advisors have 15% year on year growth on a decent year. I mean, it's a good year, bad year, and all that stuff, but 15% year on year. The average redemption loss is about 10%, as the market data says, from your AUM. The redemptions is happening and stuff like that. But if you look at, even if you take average as 3% of your assets and stuff like that, for every 5 years, you would have lost more than 1 year of growth, 20% decrease in your AUM. Therefore, for every 5 years that you work, because of this redemption, only because of redemption, not because your client is going away or you are not servicing the clients or client is unhappy, all that stuff. Because of just redemptions, basically, either the need for money, mostly it's need for money, because you're advising them on how to do it and stuff like that, need for short to mid-term money. You're losing 1 year of your income every 5 years. Therefore, if you work 20 years, you get paid only for 15 years, for example. I mean, you can extrapolate to how many ever years you're working and how much you've lost and stuff like that. A lot of them think as it's eventual, it's their money, they're taking it, and also I'm totally with it. It's a customer's money. We don't have any authority or reason to have any ownership over it. But you can advise them, saying that there is an alternative that exists and it is avoidable. Basically, we accept it that it's unavoidable. It is avoidable to a certain extent. I understand all of them will not take loan against mutual funds, but at least 60%, 70% of your clients might take it because of the impact of the product. This is just to tell you what the redemption reality is for your business, basically. Previously, I showed from the customer's point of view, 50% of assets is coming off every 2 years. It's getting churned out, basically. Whatever reason can be many things which we can get into. But the impact on your business is basically, this is the reality, actually. You're losing about 1 year's worth of thing every 5 years. So what do we do? So we have this platform. I mean, like I told in the introduction, the DhanLAP, a digital platform for leveraging your clients' digital, financial products, basically, loan against mutual funds in specifically. We are the first ones, like I said, 100% digital across mutual funds. There was HDFC Bank and ICICI Bank doing only with CAMS or with KFintech and stuff like that. We are the first ones which came in 2021, April, I think. I'm not sure about the exact month. 2021, we launched the product. And then we were the first ones to do 100% digital LAMF platform. And even today, we are the only ones, I think, which do with multiple lenders. See, platforms are associated with their own NBFC or bank, or they are associated with only one lender predominantly. What we do is we associate with multiple lenders. You bring your customers or your clients are there, your customers are there. They come to our platform. We make sure they are serviced by the best lender, basically. Best lender is decided in a lot of aspects. We can talk about it. But basically, the credit score of the customer, the income of the customer, the amount of loan that he needs, banks cannot give you more than 20 lakhs. There's a lot of constraints, about 11 or 12 constraints that they do, whether they want EMI or interest or in EMI only and stuff like that. So a lot of things we ask the customer, we take the data of the customer and we match it with the lender's rules and regulations or the things that they have given us. Therefore, we have multiple lenders, and that's a big advantage for your customers to be on our platform, because he's getting the best of the lot that we have, which is probably the best in the country and stuff like that. Okay, therefore, and then obviously everybody does this 15-minute instant loan dispersal. We have tied up with a bank which immediately dispersed real time, basically, because we are sending a feed and they're dispersing to the customer's account and stuff like that. Obviously, it's digital, zero paperwork, no branch visits and stuff, and we accept all schemes. I mean, it just matters of whether it's a locked scheme or not. You guys know a retirement fund, ELSS funds, and other things are all locked schemes. Other than that, we tied up with 5 NBFCs. Therefore, there's no maximum loan limit. There's a minimum loan limit of 25,000, but there's no maximum loan limit. Like I said, for the last 10 minutes or something, your clients keep their investments, you keep your AUM, and then everyone wins. So what are the challenges? This is what we try to address from the beginning, right? Why are people, okay, this is a great product, we have great platform, oh, it's very, very useful. Why is the customer not taking loan? I mean, why is there hesitation when I say loan? Okay, the word loan, okay, is a bad word. Whatever, it's ingrained in our brains that word loan for retail customers, for businessmen and all, it's great. But for retail customer, the word loan is a bad word usually. I mean, I've faced it hundreds of places where I call leverage, I call this, that, but eventually they call, am I taking a loan? I said, yes, sir, you're taking a loan. Yes, madam, you're taking a loan, basically. Loan as a word is being abhorred of, or whatever, good or bad, we can discuss, but doesn't matter. I mean, it's a customer that matters, basically. It's basically, I put in 3 buckets. I can have 4 or 5 buckets I can talk about. For this presentation, I took about 3 large buckets where customers come to us and talk to us and tell them. And when we try to tell them about the benefits of loan against mutual funds, they talk about why they cannot take it, why they're afraid of. The first is fear of risk. I mean, when you take my, we call it lien marking. You can call it pledging in shares, assigning in insurance and stuff like that. Let's stick to the word lien marking. When the lien marking is basically when the NBFC or the bank lien marks your assets, your mutual funds, like a house lien or a car lien and stuff like that. There is a mutual fund lien mark. They said, oh, the NBFC or the bank will take away the assets, will sell off my assets and stuff like that. No NBFC, no bank can take off your assets unless you fall below a certain limit. We can discuss the limits. It's about 75% of your, if you have 10 lakhs and you took a 5 lakh loan, unless you come to 7,50,000, which is 75% of your lien, unless you do it, they cannot sell it. Even if they want to sell it, they have to give you an opportunity to compensate for it. You can say you can pay another 2.5 lakh as money, or you can lien mark another 1.25 lakh of your more mutual funds. If you have more mutual fund units, you can lien mark it. Well, you just cannot sell it. This is what we make to make the customer understand that we cannot just go into the market and sell it because it fell by 1,000 rupees or something like that. It doesn't happen. It cannot happen. The rules and regulations against it, and RBI is very very, very particular, especially with retail investor. So the fear of this will be sold and I will not have anything has to be explained, that there are regulations around it and no NBFC, no bank can work around that regulation. And there are, I mean, even the market can fall. I mean, nobody can predict markets. Somebody predict markets, I don't believe them. Therefore, if markets cannot be predicted, therefore, if it falls, then there's an alternative to it. Yes, you can put more money, a little bit more units you can lean mark, or more money you can put in prepay the more money, so that your level goes to that 50% of equity assets and stuff like that. And second one is, whenever you said loan, I told, loan is a bad word. They always involve very high interest rate, 18%, 25%, 22%. They look at this MFI interest rates and stuff like that, and personal loan interest rates and stuff like that. We educate them. Definitely, LAMF can never be equal to a personal loan, because there's no guarantee in a personal loan. Here, you're guaranteeing. Therefore, the loan rates will be somewhere around 10.5, 11 sort of percentage what we have, and the interest rate reduces. Hopefully, they're talking about RBI reducing the interest rate. The interest rate will be further reduced and stuff like that. Let's assume today's scenario, because we can't, like I said, nobody can predict future. 10.5 to 11% is what the interest rate is being offered in the market across NBFCs, across banks and stuff like that. Therefore, you have to educate, you have to tell them the biggest challenge is misunderstanding of the product, that it is a personal loan product or something where they're charging 18% interest and 22% interest and it'll go away and all that stuff. The third one is, this is the most common thing. You will think that the fear of risk and the misunderstanding of the product is the most important. The last bucket in this scenario, in this slide, is the most important thing. See, advisors are very good in educating the customer. Don't touch it. Don't touch it. It's a long-term investment. I really respect it. They should not touch it. But when a need comes, instead of selling, you lean mark. That is what has to be explained, or that has to be conveyed to the client, that, hey, mutual funds are untouchable. That is why we are not asking you to sell. See, that is a corollary of what you're saying, right? It's untouchable. Untouchable means unsellable, you can say. I mean, whatever. Don't sell it. There's no unsellable word. Don't sell it or something like that. Therefore, what you should tell him is, this is the long-term investment. Hence, don't sell it. Please lean market, pay it over a period of time, and you get back on the saddle. This is like riding a horse, right? You're riding a horse, a stream or a mountain or something comes, you're not able to ride the horse, you get down from the horse, walk along with the horse, take the trouble, like they're paying a EMI over a period of a year or 2 years and stuff like that. Then, when the good time comes or a green field comes, you get on the horse and ride it. You've reached your destination faster. If you sold the horse and walk, you'd again buy the horse when you go to across the stream or across the mountain and stuff like that. This is the major challenges people have. Either they are afraid that their assets will be sold, or it's high interest rate, or, hey, my advisor said it's untouchable. Why are you trying to lean market? I'm not trying to say it is untouchable. That is why I'm saying don't sell it and stuff like that. These are the major things. And then other things that happens, people complain about, oh, I went to that place and then I paid off the loan, but still they didn't unlean mark my assets. A lot of other things, smaller things, which we can discuss in our Q&A or in later presentations, where there are 3 or 4 things that I can talk about. Usually they complain about they took a loan and they didn't get, they got sold because the market fell, and they didn't get enough notifications from bank. Usually it is bank, but not always. You can't blame bank for everything. Then they say, oh, I paid off the loan, but they didn't unlean mark and all. We say in 3 hours, we'll unlean mark once the money hits the bank and stuff like that. There are digital advantages of doing it and stuff like that. So, I mean, like you said, what are okay, this is the challenges from the emotional part or the or the awareness part from the client. What are the common mistakes that they do? You know this part. I mean, you can write 20 different financial goals. I came up with only 5 or 6, basically. I mean, you save it for retirement, you save it for buying a home, or general wealth creation. Oh, I want to create wealth for my family or for myself, for whatever need, education needs, marriage needs, whatever needs that they want. Usually, whenever somebody takes a loan, we have to ask, what is the reason for a loan? The common reasons, I think the most reasons are the top 3 or 4 reasons, basically. It's basically home renovation. Like I told you an example, the guy was building a house. Down payment is not very, easily available. He gets a loan, but down payment is not available. Loan is yet to be sanctioned. He wants to renovate the house and stuff like that, or build a new house, buy a second house and all. When I say home renovation, it includes all types of home buying and home renovation and all that stuff, where they get a loan later on, or they don't have a loan for the down payment and stuff like that. And obviously, medical emergencies. When I say emergencies, it can be medical or otherwise. It's basically emergencies that we collect and stuff. We say that's what people say, that we don't have any answers. Yeah. If you don't want redemption, then you can take a loan against it and stuff like that. Education is the most important. Education and credit card outstanding payment is usually the common real, retail investors, retail investors need for money basically, because education fees comes every year or every quarter, I'm not sure. Every year for sure, because we see an increase in spike of our loans in May, June time frame where education fees has to be paid for the next year, full year and all that stuff. And then again, credit card outstanding payment where they're paying about 36%, I don't know, 42%, I don't know, depending upon the credit card that you have and what bank that you have with and stuff like that. It's about 36 to 42% in India. Therefore, that is basically a very big reason for redemption and stuff like that, where they come and say, I want to redeem for this. Can I take a loan against it and stuff like that? For all this, home, education, these are all short-term. See, education, you're going to pay the fees now, and over a period of time, you'll pay off the EMI every month. You're willing to pay, but the school or college needs it upfront, all the money and stuff like that. Same with credit card. You have to pay everything, then you can't pay monthly because it's already charging 37 to 42%, whether they pay monthly or not. For the remaining amount, they'll start charging basically. Suppose LAMF is loan against mutual funds is what we call LAMF, is the best solution. Instead of selling your mutual funds, you lean mark and do it. So, this is what you had to convey in short. For the last two slides, we explained the challenges and why they're doing it and stuff like that. You have to explain to them that this product, loan against mutual fund, is the perfect balance. I don't see any other balance between liquidity and investment preservation. You need both. You need liquidity because you need money. It's your money, your assets. You need money. You cannot say you cannot sell it. You cannot do anything with money. I will. Customer can do whatever he wants. It's a perfect balance between liquidity and investment preservation. This is what you have to explain to your clients or excuse me, to your customers and stuff like that. To basically what you're saying is you're educating them, you're making aware of them. It's their decision, obviously, at the end of the day. But I couldn't see another product which will give you a balance between you're getting the money now, but your investment is also growing over a period of time and stuff like that. And people also confused with loan against shares, with loan against mutual funds. Loan against shares is also done in a very similar way, but done for a different need. Usually nowadays I think it's become common, but usually shareholders are much more savvy about the market and doing it for various trading reasons and stuff like that. But mutual fund investors are much more retail and I wouldn't say not savvy, but not aware of various pitfalls of selling selling a financial instrument and stuff like that. That is why they come to the advisor. That's why advisors guide them, help them in their lifelong journey of investments and stuff like that. So you are the perfect person. The advisor is a perfect person to say it's a balance between the two, and you can consider this if you want to. So, okay, I've told them and I've told them that is a balance between them, but how will I educate them? Now the challenges are there. We talked about challenges. We talked about the various reasons why they have it. Then we talked, hey, how to convince them and stuff like that. Then you have various other things to convey your conviction or communicate your conviction effectively. Definitely, it's instant funds are available. You avoid your taxes because, I think it's 12.5% nowadays, I think, and 20% within a year, STCG, LTCG, exit close within a year for mutual funds and all that stuff. And then you don't have to take all the money. If you have 10 lakh worth of mutual funds and you take a loan of 5 lakhs, you don't have to take 5 lakhs immediately. You can take 1 lakh right now. See whether you have expenses more than 1 lakh. Then you take another 2 lakh, 3 lakhs and stuff like this. Is what I suggested the guy who's building a house, which I gave an example. I said you should have done with one loan and taken the loans in January, March, and May. He said, oh, I didn't know that and all that stuff. We write it and we communicate and all that stuff. But people are not aware. They think a bank can give only an overdraft. NBFC can also give an overdraft facility, and this loan be an overdraft facility. Now, home renovation loans, home loans, all things have this overdraft facility. Whenever you want, you can take it, and you have sanctioned a little bit of limit. It's like any other bank account overdraft facility. That's what we provide. You can lean mark 10 lakhs, get a loan of 5 lakhs, and you can use only 1 lakh today and 2 lakhs tomorrow, and tomorrow means next month or next year or something, next quarter or something like that. And then you don't have to take all 5 lakhs, and you will be charged only for the money that you use. Exactly how an overdraft works in the bank. They'll charge you interest only for the money that you use in the overdraft account and stuff like that. So these are the things you can convey to them so that their fear can be reduced, their acceptance can be increased, and then they become comfortable saying that whenever I want, I can pay it back. Whenever only the money that I take, I'll be charged and stuff like that. It's the same thing that I'm talking about in a very broad sense. To four things you can, if you cannot remember all the things, basically you can tell them, reassure them with all the things that we told in the previous 2-3 slides, saying that, hey, this is what you can do, this is how it works, this is what the problem is, this is the solution. You can see this is one of the solutions. This is not the solution. This is one of the solutions. The other solution is redeeming, basically. This is what you can see. And then you can highlight, hey, you can prepay whenever you want this overdraft facility. There's no taxes and loads and stuff like that. And then obviously a platform brings into place. Oh, how long will it take? I have to apply an application form, takes 4 days to approve and all that stuff. In 15 minutes, you will get the money into your bank account usually. Even if it is a little bit late, you will complete the process in 15 minutes. In 30 minutes, you will get the account. Within 30 minutes, you'll get the money into your bank account, in the customer's bank account, basically, and stuff like that. I mean, and then you can use examples like I told you, the education loan, the home loan, the credit card loan. You can give examples, and one of them, I'm sure your client, 90% of your clients will be in one of those 6 or 7 categories, because our clients, we have done so many clients, 20,000 clients are there in the platform, and most of them have this. Therefore, we have taken collection of data across the country and stuff like that. So this is what you can clear. Now we said what are all the problem challenges, how to address them, and how to overcome the customer hesitation, tell them very clearly what to do and stuff like that. Now we come to the part where how you can be equipped and what you can do. You can turn every redemption into a growth opportunity. That's like a greedy statement from me, but I want to be greedy. Nothing wrong in being greedy, basically. For me, every redemption can be turned into a growth opportunity for the advisor, basically. When I say advisor, like I said, all the categories of advisors and stuff like that, MFDs, RIAs, agents, brokers, everybody talking about. I'm giving it just a common word. But you can become a redemption guide or redemption guru, or whatever you want to call it. You can turn every redemption for your clients into a growth opportunity. Obviously, it's a great benefit for you. I don't have to repeat this because you guys all know about it most of the times. You protect your grow and AUM. When they redeem, the AUM will go away. Obviously, your trail income directly depends upon the AUM. I mean, mutual fund industry, whole industry works like that. And the most important thing I'll tell you, it's not about your AUM, it's not about your trail income. All that money will come, money will go, and all that stuff. The client trust. If you can protect his AUM from being redeemed, the thankfulness of it when it grows. For example, I'm just making an example. This may not be true in every year, every market, and all this stuff. 2024, if you have protected 1 lakh of your client's asset in January 2024, in October, after that, I will not talk about it. In October 2024, you'll just be so happy about it because you would have paid most of his loan, whatever, 80% of his loan would have been paid if his EMI or interest would have been paid for 8 months, 9 months, and stuff like that. And be so happy. Again, the reverse of it is if you take it in October and the money has fallen, that's life, that's market. Still, the market, we all believe the market will grow, right? That's why we are all in this business, basically. If you say the market will always go down, then it's always optimistic people that grows the market, and the market is also optimistic 90% of the time or even more percent of the time. Therefore, that is what it is. Therefore, in any case, the market going up, market going down, mutual funds going up, going down, whatever the thing is, you are helping the client with the best possible advice an advisor can give to his clients or customer and stuff like that. And then you are protecting their assets for a period of long time. You're not talking about 2 months, 3 months, right? You're talking about 5-year investments, 10-year investment. The guy who's saving for marriage has been saving it for the last 10 years, basically. It's 10 to 15 years, he said. 10 to 15 years, I've been saying, sir, from the day she was born, I've been telling you very, I said, you are the best investor who was continuously putting SIPs and stuff, and SIPs are unheard of and stuff like that. Therefore, it is these clients or these customers who have to be educated and made aware, and then make them do, and they'll thank you for the trust, for the advice that you give them, and the trust is automatically built. All other things is money, exit, load, ST, all that will be forgotten. Your trail income, everything will be forgotten. But the trust that you build with the client will always be remembered, because when he gets married, when his daughter gets married, in my previous example, he would he would thank you at last 2 minutes. He would close his eyes and thank you because you did this to him. Otherwise, it's very difficult. It's not like his daughter's not going to get married. It's just becoming much more difficult, make the life easier, basically. Like the same thing. I mean, this is one of the things that withdrawal opportunity, like it's the same thing. We are repeating it here, and what the advantage on the right side are. Basically, you are getting the clients to protect their assets and stuff like that. That's what you're doing. That's what your major aim is and stuff like that. So, I mean, how do you do this? Okay, you told me what are the challenges, how to educate the client, what should I force? I should become a redemption, redemption protecting guru and stuff like that. You're told so many things, but how do I do this? I mean, I don't have time to do this. See, the major task or the major function or 95% of your time is spent on advising the clients for investments. I totally understand. I totally respect it basically. But it's also for investment and also to protect the investments also. And that's why we are saying this is to protect the investments and make the client's investment go. You will be benefited, client will be benefited, everybody will be benefited in the ecosystem. Mutual funds will be benefited because of sticky assets and stuff like that. So you are benefited because of AEM. In money terms, you are benefited because of your AEM, protecting your AEM, protecting your trail fee. Customers benefit because growth is happening in the portfolio. Hopefully, it's a growth that's happening in the next. Definitely, it's a growth over a period of 5 years, but hopefully, the growth is happening during the term of his loan. And then the mutual funds are very, very happy. The AMCs are very, very happy because sticky assets, that's how they are. Most of the AMCs are evaluated, top management AMCs are evaluated by sticky as how many years with the assets there, for how long the assets have been there and stuff like that. But the whole ecosystem is benefited. Obviously, the platform is also benefited. Therefore, how do you do this pretty fast and simple and stuff like that? Is we will give you a personalized link. It will be your link. You can share. There's various ways of doing it. We can get into it. But the easiest way to start tomorrow or today is basically once you register, you will get a personalized link for you. It will say DhanLAP.com/client is Chandra. I mean, not be Chandra, it will be some number, it's an encrypted number and stuff like that. So when I send it to my clients, basically, if Ramu is my client, Ramu, when he clicks on that link and registers with me, he'll be under you, under Chandra. If Somu comes, he'll be under Chandra and stuff like that. Therefore, the link is a personalized link for you, which you can share with your client using WhatsApp, email, SMS, however you want to share it and stuff like that. By the way, our platform is in web, in Android, in iOS, all the platforms that you can think of. Our platform, our applications are there. You can download it in the App Store and the Play Store, or you can use it the web DhanLAP.com. Therefore, your personalized link will be going to one of those, either the mobile or both the mobile and the web, wherever the customer is basically. What we'll do is once you send the personalized link, once the client comes in, we will analyze the portfolio. How much we will get the portfolio automatically from MF Central and other places, CAMS and KFintech, and we'll analyze your portfolio and we'll immediately give you how much he's saying. You can analyze your portfolio. We call something check eligibility. I'll show a demo in 2 minutes where you can analyze your portfolio, client's portfolio, and say, hey, you are eligible for 5 lakhs. Why are you redeeming, sort of thing? Or you're eligible, you have a problem, you'll have 5 lakh, or you can keep he's having eligibility of 5 lakh and then come back later when he has an issue and stuff like that. And we will choose the best, like I said in the beginning, we'll choose the best lender of the lenders that we have using like 11 or 12 conditions are there on the left, and the lenders your requirement, the customer's requirement, and the lenders rules and regulations, stuff like that. 15-second video KYC will be there, or CKYC will be there, depending upon the lender that you go to. And it's instant pledges happen, digital agreement, everything. Money will be in the bank, like I said. If it is 15 minutes to the, once you complete the process, the money will be there with some lenders. Some lenders will take 30 minutes. That's all. Between half an hour, within half an hour, you will be getting the money in the customer's account and stuff like that. That's all. Like I said, the minimum is about 25,000. Maximum is whatever you want, because NBFCs don't have a maximum. Banks have a maximum of 20 lakhs. So this is the partner corner that we have. Partner, we call all the advisors as partners in our system. We call DhanLAP partners, and this is a partner corner site. We have a special section of our website only for partners and stuff like that. You can look at it like you can register a client, you can upload a. If you don't have time to register each one of them, you can upload 10 of them. You can upload into the system or hundreds of them. You can upload whatever you want. You can upload so that you can check eligibility, which I'll show you. You can share, like I said, a referral link can be shared. There's a loan calculator. You can send it by WhatsApp or by email or however you want to and stuff. And there are videos available which you can go through in our system. Once you register, you'll get everything. And then you can share it with your clients, the videos or the presentations and stuff like that. And there's a check eligibility part, which I'll show you in a minute. Basically, if your client is there, there's a check eligibility part where the client is there. And if you have the clients, you will have client's email ID, phone number, and PAN. You can go through the system and figure out how much is eligible for it. I mean, if you look at, I'm showing you just a brief demo. Enter your client's PAN number, mobile number, and email address. The client will get a OTP. Therefore, you will enter the OTP, and then he'll get a KFintech OTP, and then we are done basically. And then you will get from KFintech also an OTP, and then once you are done, it will give you all the portfolio and what it is for and stuff like that. Therefore, you don't have to worry. This is what will tell you. It will tell you, hey, Jitin is the name of the client. He has 53,400. Cash value is 1 lakh. He has equity is 50%, debt is 70%, gold is 75% of LTV. We are calling loan to value ratio. That's what we call it. And then this is the amount that he has to pay every month. He'll get a loan amount of 53,000. You can send a WhatsApp message right from the system and stuff like that. But there are various facilities like this available, and you can even, we have a distributed assisted model where you can take you through to a certain level for the client, and then you can hand over to the client for OTPs and stuff like that. So like I said previously, this is the referral link that you share. You have it right there. You can share the referral link with your client and stuff like that. We also, I mean, I'm just going to run through this for 3 or 4 slides. We have co-branded things that we give it to you. Therefore, you can send it to your client, again, either through WhatsApp or usually it's WhatsApp or email. SMS cannot take messages, pictures usually. Therefore, you have various things that we say for various Dashara, Ganesh Chaturthi, New Year. And this is one thing that I want you to understand before I open up the floor for questioning. Basically, it's already like 12:15. Therefore, we'll start the questioning part in a 2 to 3 minutes. Basically, 32% or 30%, let's say, of our clients are taking a credit line without informing the distributors. We ask them whether their MFDs are there and stuff like that. Therefore, they are taking thing and you are missing out on coming. This is just information for you from our platform. There are other platforms and other banks and stuff like which do it. You can take, we take statistic, we take metric on everything. Like I said, from every client we take what is the purpose of the thing, how much is he taking, why is he taking it, and all. We make sure we understand the client as much as possible. Some clients give you information, some clients don't. It's their personal wish. Therefore, whoever talks to us will do it, and we will know the MFD or not. If I look at my MF Central thing, I will know who the distributor is and stuff like that. Therefore, we know about 30% of our clients are one of the distributors, whatever, 2 lakh distributors are there in the country, one of the distributors' client, and they're coming directly. This means you are missing out on your advice. I forget about money, commission, exit load, and all that stuff. You are missing on building the trust for your client. Please be advised of it. This is just information for you, basically. And last thing I want to tell you is, before I leave, before I go to the Q&A session, is basically there's another, see, we're talking about only when you have a redemption request, when you have a need for it, when you have an emergency or a home loan, whatever. We discussed so many things in the previous slides, right? We're talking about only when you have a need. But here, there's another strategy which we have, some clients have adopted, not in a large number, advisors have not got into it, but this is a good thing for you. I mean, it doesn't matter where you do it, what you do it and stuff. Usually, every advisor that I know of, 100% of the advisors advise you 3 months of your salary or 6 months of your salary, put it in an emergency fund. This is always everything. My advisor advised it, everybody's advisor advised and stuff like that. See, liquid funds, because it's stable, it will not go down and all that stuff. What we are thinking, what our strategy is, what we propose to you, that you propose to your client is, why can't you invest in equity or hybrid funds? I'm not talking about thematic funds, advanced funds, and all. Any balanced fund or hybrid fund, which gives you around 11%. Let's not say 11 to 15. Instead of 5% liquid returns, which is about 5.3 today, it's about 11 balanced funds and other funds gives you over a period of time, 11, 5 years, 6 years, 11% to 15% returns is what they have given, basically. You can do it in lean market. When you lean mark those things, you just don't have to take money. Remember, we charge you only for the money that you use. If you have 20 lakhs worth of assets that you lean mark and you have a 10 lakh loan, you took only 1 lakh, we charge only interest for 1 lakh. And then you have overdraft facility for 9 lakhs more. And you can pay back your 1 lakh in whatever, 10 year, 1 year, 2 year, 10 year and stuff like that. Or you can continue to pay interest and keep it there, okay? And renew the loans every year. Therefore, what I'm suggesting is you can advise your customers to put it in balanced fund or hybrid fund somewhere where they invest about 10 to 11%, not anything more than 5%. And then lean market, if you click on come to our mobile app or website, you can click on one button. In 15 minutes, money will come into the customer's bank account. Therefore, the customer gets the same facility like an emergency. Yes, would the balance fund go down? Will the hybrid fund go down? Yeah, it might, basically. But if you do it correctly and you match correctly and stuff like that, it will not go down to 5% returns and all. I mean, it might, 2008, it went -3, 2020, it went to 2% and all. And there are the statistics across the board. I can also tell statistics. But usually, in a 5-year rolling average, no fund has given a negative return unless the fund is closed or something like that. Other than that, in a 5-year rolling return I'm talking about, every fund, every equity fund, every balance fund has given more than 10% returns, even in a bad time, in 2008, 2009 times and all that stuff, even 2020 COVID times and all that stuff. COVID times actually give much more positive returns. Therefore, you can take some periods and talk about it, but if you take about a rolling period on an average, it will give you. Therefore, this is a suggestion that I'm doing, which a lot of advice is probably they're aware of it. These are all great guys. They're aware of it, but they're not putting into practice. It's not easy to practice. You tell the client, instead of putting that, put it here, get 5% more. I will get a higher trail fee. There's nothing wrong in saying I'll get more money. There's nothing wrong in saying that. And then your portfolio continues to grow at a pace that is not 5%. It will go around 10% and stuff like that. And whenever you want the money, see, even if you have liquid funds, if you do a liquid redemption, you'll get only T+1 tomorrow morning. If you have between like 7 o'clock in the evening, if you type withdrawal, in 15 minutes, you will get the money into the customer's bank account. So this is much more advantage than liquid funds. But then there will all be questions, what happens, the market falls and all that. We can talk about it later, but I'm giving you as a suggestion before I open up the floor for question and answer. This may be something that you might want to consider. Your idle funds can be made into growth engines. That's what it is. I'll stop here and open up for questions, basically. This is our number, email, WhatsApp. Most of you know about us and stuff like that. But if you have any questions or anything, please go ahead. You can unmute it and do it. Any questions from anybody? I see a lot of known faces. Yes, sir. Somebody wants to talk. Mr. Akku Vishwanath. Please go.
Hi, sir.
Yes,
Hi, sir.
Yes, sir. Good morning.
Sir, good morning, sir. Sir, I would like to know what will be the rate of interest of this and what will be the best rate of interest we can give.
It's 10.5% to 12% is what we're offering today, sir. Depending upon the lender, depending upon a qualification. The best rate I can offer is 10.5%. The worst rate that I'm offering is 12%, sir.
Oh, okay. And what is that we get, sir, in this?
Yeah, in this, 1 minute. I have a slide for it. Give me a minute. I'll show it to you. You get 50 basis points upfront, sir. I mean, some platform pay upfront, some platform pay trail fee. We pay upfront. Therefore, you get 50 basis points off the loan amount upfront. We always say upfront is better than trail, and we have given you why it is and stuff like that. That's what this slide talks about. You'll get 50 basis points of the loan amount upfront, sir. Apart from you protecting your AUM, protecting your trail fee and all that stuff, you'll get from us 50 basis points of the loan amount, sir.
50 base points and sir. What is it?
If it is 10 lakh, basically 50 base 0.5%, sir.
0.5%.
50 base points, 0.5%. If you have 10 lakhs loan, which is what I have worked out for, 10 lakhs loan, you will get 5,000 every year, basically. Or every renewal, depending upon, I'll consider a loan as a 1-year loan, usually. That's the average in our platform. You'll get 5,000 the first year, and if he renews, you'll get another 5,000. You'll keep on getting it until the loan is serviced totally.
So that will be for every year, sir?
If they renew, sir, if the customer renews, it may be every 6 months also if the 6 months loan, but I'm just giving you an average. He takes a 1-year loan and he's interest only. If the EMI, you would have finished everything and you have gone home and we have revoked his assets and all that stuff. But if it is an interest-only loan, we pay you 5,000 the first year, 50 basis points of that. And second year also we pay 5,000. Each renewal we pay 0.5%.
Means every time whenever the customer takes and pays back, and again if he takes again,
then it's again 50 basis points. Yes, sir. Yes, sir. It's a renewal. That's I mean, yeah, that's a very hard way to do renewal. Yeah, any loan he takes, you will get it, sir.
0.5.
Okay. Yeah, please go ahead, sir. Somebody else, please go ahead, sir.
And one more thing, sir. What is the list, sir? List of what are the banks which we are doing?
Sir, I have done it with 5 NBFCs and a bank, sir. We have tied up with IFCI, the biggest PSU in India. We tied up with Shriram Finance, which is the biggest NBFC in India. Shriram Company. We tied up with Bajaj. We tied up with One Bank, South Indian Bank. And we have other things on the pipeline. I cannot tell you that, but we are planning to tie up to at least 10 lenders by the end of this year.
Okay, thank you, sir.
We have about 5 lenders today.
Can you share the list, sir?
Yes, definitely. I'll send you the list. Yes. I don't have the list on the presentation, but I'll send you the list. I'll remember. I'll ask the person to send you the list, sir.
Thank you, sir.
And somebody else was asking a question. Please go ahead, sir.
Hello.
Yeah, yes, sir. Please go ahead, sir.
Sir, if any client prepays his loan,
Yeah.
so will the commission be deducted from the
No, sir. No, sir. No, sir. We pay the commission. That's why that's a difference between trail and upfront, right? Therefore,
Okay.
if it is upfront, if it's trail, that's why I gave a calculation here. If you look at the slide that I have placed you in front of you, basically the trail commission, if the 9 months, if he closes, if he closes in 6 months and stuff, and short term, if he closes, the trail will stop. In our case, we have paid you the trail. We have paid you the commission upfront, and there's no clawback or anything. If you're asking that, no. It's basically paid
Okay,
for
sir.
that particular loan one time and we are done.
Okay, thank you for the clarification, sir.
Anytime, sir. Anybody else? Any questions? Okay.
Do you have an office in Hyderabad, sir?
No, sir, it's all digital, sir. We have only one office in Chennai, and that also nobody walks in or anything. I don't see MFDs have walked in. I've met MFDs in my office and RAs in my office, but other than that, no, sir. It's all digital, sir. We have a phone support, we have WhatsApp support. You can contact us by WhatsApp, you can contact us by phone, email, obviously. And whenever you register, we call you and help you with whatever things that you need. So, any other questions, sir? If you don't have any questions, the last thing people ask, your customers will ask, which I want you to be prepared, is basically what will happen if the market goes down. Everybody only worries about market goes down for whatever reason. It's good to worry, actually. It's always good to worry, right? Therefore, what happens when the market goes down and stuff like that? While market goes down, like the example that I gave you, he has 10 lakh worth of assets and he has taken a 5 lakh loan. You've taken all the 5 lakhs. Assume there's no order. He took all the 5 lakhs totally and stuff like that. It's easier one to explain. If the market goes down to 9, if his assets goes down to 9 lakhs, basically, we will give him a warning saying that, hey, you have went to 90%, which is 9 lakhs is 90% of 10 lakhs, basically. You've gone 90%, please pay the amount 10% or lean mark more units and stuff. It will give a warning when it goes from 90 to 81. At 80%, which is 8, if his assets come from 10 lakhs to 8 lakhs, basically, he will say, hey, do it. At 75%, we'll invoke. This is a second and whatever cautionary warning. We'll do it 90, 89, 87, 86, and all first warning. 80, 76, 79, 78, we'll do. At 75, we will invoke the loans of the 25%. That's 2,50,000 we'll sell off in the market. So the loan will come to 7.5, means 3.75 the loan should be. The loan should be 50% if it is equity, 70% it is debt, 75% if it is gold mutual funds. Okay. Therefore, in mutual funds, it's very simple. Most of the retailers have only equity as a large holding, basically 90% probably is equities, or even more nowadays. Therefore, if it comes to 75%, we will sell off the assets for that particular moment, and we'll give enough warning, enough emails, enough SMS, enough phone calls. We'll call the client because we don't want to sell. Like, people are afraid, right? The fear of risk I told you in the beginning. People are only afraid that you'll sell off the assets. Oh, they'll not tell us and sell off the assets. No, you will get at least 5 emails, 5 SMSs, 3 calls before we do anything else. We do not see. You have to understand the platform, the advisor doesn't get benefited by selling the assets of the customer. This is what you have to explain the customer. By selling customers' assets, we don't get benefited because we want to service the customer. The longer the loan, you'll pay longer the interest. The NBFC and banks are much more happier. The whole point of an NBFC and bank is to give loans, right? Therefore, if they want the loans to continue, not to stop. Once you sell the assets, the loan will stop for that particular amount. Therefore, it is the best interest of everybody in the ecosystem to continue the loan. Therefore, we will not do that and stuff like that. Similarly, EMI failure, when the first EMI, you pay EMI or interest only, right? The first installment fails, we'll send an email intimating in 3 days' time, we will again deduct the installment. The second installment paid after 3 days, we'll send a notice saying, please pay the amount within 7 to 15 days and stuff like that. We'll give enough time for the customer for payment of EMI. We can pay even upfront EMI. Somebody's asking a question, sir?
Hello.
Yeah, please go ahead, sir.
Sir, one more question once again. If a client is paying his EMI every month, suppose a client is taken a loan for 1 year. He has paid his EMI near about for 6 months.
Yeah.
During the 6 months, after the 6 months period, the market is coming down and his total amount is getting near about 80%.
Yeah, but then you would have paid already. You would have paid already 50% of his loan, right? Or not 50, 40% of his loan already, because he's doing EMI. See, there are two things that we offer: EMI and interest only. If he's paying interest only, yes, what you said will happen. We will give them a warning. We'll give them if he can lien mark more units. If he's paying EMI, which is what we suggest usually, but again, it's a question of customers' comfort, right? I don't have so much money, that's why I'm taking a loan. In that case, I will definitely will be paid about. I'm just doing a calculation here. I think about 40% of the loan in half the time would have been paid, or even a little bit more.
No, I'm just asking. He's paying his EMI or till near 6 months. After the 6 months, if the market comes down near about 80% of his capital valuation,
yes,
what will be the process by your company?
Same thing, sir. If it is EMI is paid, you would have, see, for example, 10 lakh lien marking, 5 lakh loan, you would have paid EMI for 2 lakhs, you would have already paid as principal. So only 3 lakhs will be there as a principal. His thing costs 8 lakhs, we don't do anything. If it comes to 6 lakhs, even if it comes to 6 lakhs, I will not do anything. If it comes to 5 lakhs, I will do something which is basically 75% of the thing. For EMI is the best option that I'll tell, but clients have their own way. They want to pay interest. There are more interest-only clients in our platform than EMI and stuff like that. For a reason. They need money and all that stuff. But in your case, if a person pays EMI, he's the best person. He will, I will say never, but most of the time, he will never get a shortfall. What we call a shortfall, 90%, 80%, he will not have. Most of the time. It's almost market has default significantly and all that stuff for it to happen.
Okay, thank you.
You're welcome. Any other questions, sir? Okay, if there's no question, thank you very much. It's 12:30. We'll finish our thing. You can always contact us. Like I said, I gave it to you. This is the thing. We can sign up here. WhatsApp call, email. Whoever is registered will get a call from would have already got a call from our customer support, advisor support. Therefore, have a good day. Thank you very much again for coming to the thing on a Saturday morning. Have a nice weekend. Thank you very much. Thanks.